2022 is a more complex year, so I can't assign as high a probability to it. My perspective is, in a world riddled with debt and overwhelmed by debt, if you raise prices on people, they will consume less. So my view is the opposite of everybody else's view currently. My view is that growth slows dramatically based on both the central bank balance sheet tapering, the higher prices of input costs like electricity, those kind of things, and also gasoline for cars. Those kind of things are fixed costs. And if you rise the fixed costs in people without raising wages as much, you end up with less demand. Or its potential is more borrowing. That's the only way. You either consume less or borrow more. It doesn't look like the banking system really wants to lend in that way. And household balance sheets are already, have an excessive amount of debt. So I think the balance of probabilities is a slower year, which is not what people expect. A slower year would tend to see a reduction in the rate of inflation, a reduction in bond yields, probable return of expansion of the central bank balance sheets, which is somewhat typical after almost every single recession. The central banks tend to wait for the economy to truly stabilize. And that process usually takes about 2 years of further rate cuts as the stimulus rolls off. And then the economy comes down to a trend rate of growth, which is too low. They stimulate again, it drifts down, they stimulate again, and eventually you find the equilibrium level of the trend rate of growth, which I think is much lower than people expect. Most people see what's in front of their eyes and not what lies into the future. So you need to look at the kind of probabilistic trees. Okay, what could happen? There are no certainties. None of us know, but where did the probabilities align themselves? Most people look with inflation up now, therefore inflation, therefore wages will go up, and therefore the Fed needs to tighten. That's the general how the market tends to think. The macro game is all about living in the future and looking backwards at the probabilities to say what is the most likely outcome from here, and is there opportunity to invest accordingly.
So you think that the inflation rate of like almost 7% that we've seen in the US will go down?
Correct. Either mathematically it's likely to go down. If you also just step back and say, well, what has happened to the price of oil? It's been coming off again. Copper hasn't gone up for some time. Lumber prices, well, they've come down. So what we're left with is natural gas in Europe is still very strong.
Yep.
Some of the agricultural complex is still strong because of supply issues. Those are the real issues here. We're already starting to see mitigation within housing prices and stuff like that, where prices again destroyed demand.
From a selfish, let's say, crypto perspective, what should we want from 2022?
From what we want and what we get is always two different things.
Obviously.
Best backdrop to crypto would be further economic weakness, the marginal propensity for the balance sheets of the central banks to increase. That would be positive crypto and would certainly extend the cycle further than people imagine. That's potentially on offer here, but it's far from a certainty.
So most of the people in crypto, most of the retail is tribal and they don't know their time horizon. What are the odds for these people to actually win at this game called crypto?
If they understand two things, the adoption of the technology and therefore what that implies in market cap of this space, let's say by the end of the decade, that leads you to a core principle of, much like I did when I took the bet at 200 in Bitcoin, is it's probably a lot higher than here. Now, it's not certain, but the odds are pretty damn high. Unless that network effect stops, which we're not seeing any evidence of, then
contrary,
the best thing to do is just to shut your eyes. If you are having sleepless nights, then your position is too big. As simple as that, really.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Speaking of the price, how do you see the market right now?
I think so I asked the question, so the question you should ask is, why didn't your prediction come true? We
Correct.
need to be able to hold two alternative potential paths in our head at any one time. So I've also noted that the market has a tendency for maximum pain, which I've talked about in other podcasts. And maximum pain is, if we all believe one thing, then the opposite is likely to happen. And I step back and look at it and think, who is the marginal driver of this market right now? It is not retail. Why not? Well, the wallet addresses, new wallet addresses and stuff are below highs now. And I think it's to do with this consumption issue. you've raised prices on retail in terms of fuel, energy, fixed costs. So their marginal ability to invest has gone down as well as to consume. So you've taken marginal money out of the market. So if you've taken them out a bit, and then the institutions are at the year end and they're incentivized differently, again, they're not saying they don't believe in the market. They're saying, I believe in getting paid. And so I want to protect my profits. I get it. It created a lopsided market. Now the question is, are they done? It looks like they're done because the market has been kind of just chopping around since last week, which was the traditional last week of everybody, squaring their books. Could it have another leg lower? Potentially, could that come out of Asia, which is where a lot of the selling has also come from? Again, possibly, but the probability is that next year ends up being a strong start, just because capital gets put.
Why do you think we see so much leverage in a market?
What we don't understand is the time horizon of those people. So maybe they're very short term. So then they're making lots of profits, and then whoever gets caught when the music stops, they all get washed out. But there's a bunch of people who still make profits from doing it. Asia is more speculative in nature. There's a gambling culture that's pretty strong. So there is more speculation that happens there. They also, in many of those countries coming from a poorer base, and the leverage in crypto actually works quite well like options, because you don't get open-ended risk, you get stopped out. Yes, you get the spike, so you get the spike risk, unlike the option where you just lose the premium. But it actually is not a bad way of taking risk for people. I just don't know what their time horizons are. So my guess is a lot of them are pretty short term. So maybe they're in and out, using a lot of leverage to juice the returns. And then, yes, periodically, a bunch of them will get caught and get washed out. I don't know whether that net they've made money or not. My guess is they probably have. And if they're net making money, then they'll continue to do so.
How manipulated do you think the Bitcoin market is?
You can manipulate a market in the short term. You can't do it in the long term. So I'm not a short-term player. I hear people talking about what the whales are doing and what people are doing in Asia, what some of the the bigger trading people in Asia are doing. And sure, humans are incentivized to manipulate markets. But in my time horizon, it doesn't matter.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.